Federal Reserve Chairman Jay Powell speaking last night at the Financial Markets Conference in Florida. His big warning, rising business debt. Our Steve Liesman joins us with more. Morning, Steve.
Morning, Sarah. Fed Chairman Jerome Powell giving his most detailed speech yet about high corporate debt levels. And while he expressed considerable concern, he said in Jacksonville last night that the issue does not yet rise to the level of subprime lending that we had before the financial crisis.
At the moment, the business sector is quite healthy overall. Business income is strong, reflecting healthy profit margins. And because interest rates are low by historical standards, the costs of servicing today's higher debt levels of debt remain low relative to business income.
That's the good news. At the same time, Powell noted that corporate debt levels are high, the riskiest loans are growing the fastest, and underwriting standards are weak. He called covenants that protect lenders, quote, endangered species.
Business debt has clearly reached a level that should give businesses and investors a reason to pause and reflect. Investors, financial institutions, and regulators need to focus on this risk today while times are good.
Powell suggested the Fed will be monitoring the problem through its normal bank stress tests and the Financial Stability Oversight Committee and other things the Fed is doing. But he did not sound like any action was imminent from the Fed, in part because he said the regulated banks do not appear to have much exposure, Sarah, to corporate debt.
Did he say anything, Steve, about the economy?
Yeah, he says the economy's in pretty good shape despite cross currents that are out there. I guess that's a wink and a nod to the trade issues that are going on, as well as the overseas growth issues. And that's part of what colors his reasoning on this. And his idea basically is they should use these good times to get ready for times when some of the debt out there is going to be stressed by potential economic weakness.
Doesn't sound like, though, any clues one way or the other on the Fed's next move. And I know you've been out talking to Fed presidents yesterday with Atlanta. Hard to read. They're just firmly patient right now, aren't they?
But if anything, I thought it was significant yesterday that Raphael Bostok, the Atlanta Fed president, said it, kind of leaned against the market certainty of a rate cut. I asked him specifically about where the market is priced, and he thought the market was overdoing it in terms of its expectations out there for rate cuts. I think they're firmly on hold here, firmly in a wait-and-see mode, and so I think that the idea that there's a 70 or 80% probability of a rate hike by the end of the year, according to the Fed people I'm listening to, would be overstated in that regard.